Well, the day we've all been waiting for is finally here. The Federal Reserve just dropped its last interest rate decision for 2025. And believe me, the markets felt it. So let's break down exactly what just happened and, more importantly, what it means for you.
I mean, just look at the charts today. They were an absolute roller coaster, especially Bitcoin, which was whipping back and forth like crazy. That kind of wild volatility is a huge signal that whatever the Fed announced, it sent a massive shockwave through the entire financial world.
And this is the number at the heart of all the chaos. The Federal Reserve cut interest rates by 0.25%. Now, that was the big headline for sure, but as you're about to see, the number itself, it's not even the most interesting part of this whole story.
All right, so first up, let's just talk about the decision itself. A rate cut is always a huge deal, but here's the thing about this one. It really wasn't a shocker. Nope. Anyone who was paying attention to the data pretty much knew this was coming.
Yeah, the Fed absolutely hates to surprise the markets, right? They telegraph their moves way in advance. And in this case, the odds were already over 80% that they were going to cut. So the cut itself wasn't the surprise. The real drama, well, that came from what happened inside the Fed's meeting room.
And this is where things get really juicy. Because behind the scenes, this decision was anything but simple. The Fed was actually seriously divided. I mean, to a level that we almost never get to see.
Oh, no way. Not even close. This wasn't some situation where everyone was just nodding in agreement. Inside that room, there was a real, heated debate going on about which way the economy should go. Let's actually look at how the votes broke down.
So, get this. It wasn't just a simple disagreement. It was a three-way split. You had 9 members who voted for the quarter-point cut we got, but then you had 2 who wanted to hold rates steady and 1 lone wolf who was pushing for an even bigger half-point cut. A split like this is practically unheard of for the Fed these days.
So who were these dissenters? Well, on one side of the argument, you had Austin Goolsbee and Jeffrey Schmidt. They were basically saying, hey, inflation is still a problem, it's too soon to cut. But on the complete opposite side, you had Stephen Moore, who was arguing the Fed wasn't doing enough and needed to cut by a half point to really get the economy going.
Okay, so after a messy vote like that, every single camera, every microphone, all eyes turned to one guy, Fed Chair Jerome Powell. It's his job to step up to the podium and explain all this, and every single word he says can send markets flying. And today was no different.
And this right here, this was the line that mattered most. Powell basically came out and said the war on inflation, the whole rate hiking cycle, is over. For investors, hearing that is like seeing a massive bright green light. It's a crystal clear signal that the Fed's policy is changing. He then laid out the only 3 options on the table going forward. They can hold rates where they are, they can cut a little more, or they can cut a lot more. You notice what's missing from that list? Raising rates. It's completely off the table. The debate is no longer if they'll ease up, but when and by how much.
Powell also dropped a really important term, the neutral rate. You can think of this as kind of the Goldilocks rate for the economy. It's not too hot to cause inflation, not too cold to cause a recession. He then said he thinks we're in the upper part of that neutral zone, which is a subtle hint that, yeah, there's probably more room for rates to come down from here.
But wait, there's more. Powell wasn't done dropping news. He then announced that starting December 12th, the Fed is going to start buying $40 billion worth of short-term government bonds every single month.
Okay, so why is that a big deal? Well, for the last couple of years, the Fed's been doing the exact opposite. It's called quantitative tightening, or QT, where they sell bonds to pull money out of the system. What they just announced sounds a whole lot like its opposite, quantitative easing, or QE, which is when they buy bonds to pump money into the system.
So naturally, the question on every single trader's mind was, is this it? Are we going back to full-blown QE? The policy that has historically sent things like stocks and crypto into orbit.
Now, Powell was super careful with his answer here. He kept insisting, no, this is not QE. He called it a technical adjustment just to make sure the banks have enough cash flowing. But let's be real, even if it's not officially QE, it's a huge step in that direction. It's another sign that easier money is on the way.
So let's recap. We've got a rate cut, but a divided vote. We have Powell declaring rate hikes are done, and we have a brand new bond buying program that looks kind of like QE. How in the world did the markets make sense of all these mixed signals? Well, the stock market absolutely loved it. The Dow, the S&P 500, the NASDAQ, all of them finished the day solidly in the green. It seems like Wall Street heard the overall message loud and clear. This is good for business.
Bitcoin, on the other hand, its reaction was way more dramatic. At first, we saw this sharp dip, a classic buy the rumor, sell the news moment. But then as Powell kept talking and those dovish signals got clearer and clearer, the price just shot back up. It just goes to show how sensitive crypto is to what the Fed does.
And to put that volatility into perspective for you, Bitcoin's price swung within a massive $3,000 range today. It went from a low around 91.5 all the way up to 94.5. It was just a wild, wild ride for anyone trying to trade it.
Okay, that was a lot to take in, I know. So let's just pause for a second and boil this all down to what really matters for you. What are the key takeaways from all this madness?
At the end of the day, it really comes down to three main things. First, the Fed has officially flipped. They've gone from being tough on inflation to being supportive of the economy. That's a huge shift. Second, history tells us that this environment is usually a big green light for riskier assets like stocks and, yes, crypto. And third, just remember what we saw today. This transition isn't going to be a straight line up. Expect a lot more of these crazy swings in the short term.
And all of that leaves us with the one big question that everyone is asking tonight. With the Federal Reserve officially changing course, from tightening to easing, are we watching the very first moments of the next major bull run? That, my friends, is the billion-dollar question.